Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, does the so-called everything rally hinge on what Nvidia reports tonight? We will discuss and debate what is really at stake with the investment committee. Joining me for the hour today, Joe Terranova, Stephanie Link, Jim Leventhal, Bryn Talkington. Let's check the markets here. NASDAQ is the winner. As you see, S&P is positive, which is nice to see because stocks have been down 4 days in a row. The NASDAQ's been down 5 of 6. Bespoke says the S&P 500 closed in oversold territory for the first time since the tariff tantrum on Tuesday. Joe, does Nvidia determine whether we have an everything rally or not?
Well, it certainly would help to lift animal spirits, which have been dampened significantly. You're citing the market being higher today. The S&P equal weight is down 40 basis points. So where's the broadening? It's really non-existent. We're unfortunately sitting in an environment right now where if you talk to the hedge fund community, you speak to speculators, you ask yourself the question, what do you want to do here? Do you want to actually step towards risk or take risk off? I think the question is you're more inclined to take off some risk. And that's the place that I reside myself right now. I called for a chase for performance. Ultimately, the chase for performance began. Maybe it's going to end a lot sooner than I expected it to, but it needs a catalyst. And hopefully tonight, Nvidia is one of the reasons that helps.
Well, I mean, Steph, JP Morgan's trading desk says the setup appears to be poised for an everything rally. They say, given that there have not been any changes to the fundamental story, nor does our investment hypothesis rely on the Fed easing, we're dip buyers. As we look at 2 key events this week, non-farm payrolls, yes, it's way backward looking, obviously, because it's September that's going to be released here in November, and Nvidia tonight. When combined, this could set the stage for the next run through all-time highs. Do we agree? As they make the case, as we've discussed, the fundamental story hasn't changed. The narrative around AI and spending and debt and everything else, bubble, maybe that's changed a little bit, momentarily, perhaps, but nothing fundamental's changed. So why not all-time highs?
I think we could see all-time highs. We had the volatility in November. We didn't get it in September and October. Okay, so now you've had the pullback. The economy, Atlanta Fed tracker is 4.1%. It keeps going higher. Scott, every single reading, higher and higher. And that bodes very well for overall earnings. Earnings came in at 12%. I think they're going to come in at 12% for the next quarter and next year, too. We have a lot of momentum in this economy, and we haven't even really seen deregulation. We get the low taxes from the Trump administration, and next year you get $150 billion of new fiscal spending. So that's good. All of that is good. Now, Nvidia, it's 7% of the S&P 500, but the food chain is huge. Think about AI, data center, power grid. We talk about it. We've been talking about it for 3 years. That implies for so many different sectors in this market. So it's not just technology, but it's industrials, it's utilities, it's the power companies. So to the extent that Nvidia can be transparent about the money that's going to be spent and give us more confidence there, I think that bodes well for the overall market.
You point to, as you see it, the reward for all of these other areas. You could certainly flip that and suggest it shows more risk, too. It shows you everything that is levered to Nvidia's success, which is why we even asked the question at the start of the show. Is an everything rally in this market, Jim, primed on what happens tonight? Because of exactly what Steph said.
I think it matters a lot because a lot of this artificial intelligence trade, frankly, all of it is predicated on rapid growth in revenue and earnings from the companies involved in it. And the biggest barometer of whether that growth will come through or not is tonight's earnings report from Nvidia. Now, I do expect that they will beat on all metrics, and I expect that they will raise guidance. I say that based not just from licking my finger and putting it in the air, but what all the hyperscalers are saying about their CapEx plans, the spoken words from the managers of those companies. It would be the height of surprise to see a disappointing report in any way from Nvidia's report. And yes, I think that does catalyze us higher after a 2 to 3 week mini correction.
So we'll get to Nvidia more specifically in a second. I know you all are into that. There's no we all are. But this move in Alphabet, I got to tell you, it has defied many people's expectations. This stock hit a new record high today. Bryn, I make the transition and I come to you for a reason. because you did buy the stock. You bought it last week at $286. This latest burst is because of optimism around Gemini 3. So why'd you decide to buy it? Because the story got really negative for a while. The stock has been relentless in beating down the negativity. There's the chart, which shows exactly what I'm talking about. What do you think?
So I think I listened to the earnings call, as I have for the last few quarters on Alphabet, and I really feel like Alphabet is the juxtaposition to an OpenAI. So they had $102 billion this last quarter in revenues from search, YouTube, Google Cloud, and that continues to amplify. I think the market is coming around to their TPUs. Their version of chips, which they've been using for years, actually are better than a lot of people thought. Gemini, from a retail perspective, is gaining share from OpenAI, so it's becoming the second most, or ChatGPT, popular platform. But to me, what I see is I still go down to, I think that Siri on Apple is still this Trojan horse. And to me, it makes sense that Google actually just last week announced their private AI cloud, where we can use Gemini and not even Google gets access to that data. They also rolled out Google Shopping, where you can just say, find me a pink Christmas tree, and it goes and finds it for you. And so they continue to get better on search. And I think that if we actually hear this partnership between Gemini and Apple, putting that into there, Apple is very focused on security. This private cloud just came out. I think from a consumer perspective, Gemini's model just gets stronger. At the same time, they have other sources of revenues versus as ChatGPT is just spending money in the future. They have high margins, high revenues, and I don't really pay attention to PEs. I think it's just a number. It still has a pretty moderate PE relative to its growth rate and margins.
I go back and I'll just do it as long as I need to do it, maybe in perpetuity if things continue this way. Jim Lebenthal, as he looks at me and he smiles and he blushes as only Jim Lebenthal can, the call that you made on this name was nothing short of extraordinary. We'll see where the stock goes from here, but you, in the face of a lot of negativity, said, that's ridiculous. I'm holding on for dear life here, and it has paid great rewards for you and others.
It's felt good. I'm not going to lie. It's felt good. And thank you. Thank you very much. And I watched you and Joe on Monday, and it was frankly hilarious. But I think if there's a lesson to be learned from it, it's the power of big. This is a very big company with a lot of resources. So to the extent in May we were worried about it losing search dominance to the new AI players, my comment at the time, and it remains, is that they have the resources to compete and actually excel in the competition, which Gemini 3 is clearly showing to be the case today.
You made an argument that day, and the reason why we're showing the chart, I think this is from the Eddie Q sell-off.
Eddie Q, yeah.
Right in the courtroom, and he suggests, well, for the first time ever, Google search declined on the browser, and everybody sort of lost their minds for a moment and said, oh man, this is the beginning of the end for the dominant position that Alphabet has had in search, and that the proliferation of large language models is only going to accelerate the decline in what has been an incredible cash cow business for this company. And you said, no, this is way overdone, and that's why that chart is reflecting from that date, May 7th until today. It's an 80% gain.
I think we have more room to run. Now, I'm not saying to everybody, go make this the largest stock in your portfolio right now. It's had, as Scott just pointed out, a heck of a run. But I do think there's more in there because, and Scott, you just kind of touched on this. When we went back to the Eddie Q comments, the fears were that search was going to start a very rapid decline into oblivion. The last two earnings reports that have come out since those comments have indicated that search is growing, and now it should grow more with the advent of Gemini 3, which I'm not saying is the end of the AI competition. This competition is going to go on for years, but for the immediate future, Gemini 3 is the lead horse in this horse race, and I think that will cause earnings to go higher than what the estimates are for Google right now.
Okay. As much love as I gave you earlier.
Uh-oh, what's up?
It always comes back around. We learned anything.
Oh, now I see. All right, let's do it.
Adobe.
Yeah, I hate this stock.
Perceived to have missed out, right? So they're acquiring SEMrush, $12 a share, almost $2 billion in total value. It's a brand visibility platform. You just said it. You hate the stock. You hate it because it's
the stock is terrible.
It's gone the opposite direction of almost anything related to AI. So when are you going to sell the rest?
Probably pretty soon. And I don't want to appear tongue-in-cheek. I mean, a stock has gone down, and that really bothers me. And I've got clients' assets at work and my own money at work. I've been perplexed all along about what seems to be good operational results from the company, but the stock market just doesn't care. And at the end of the day, that's what matters. There is an earnings report coming up in 2 weeks. I may stay for that, but I'm clearly, my finger is on the trigger of the roughly 30 stocks I own. This is the one that's at the bottom of my affection, and I'm sorry. I mean, I'm not happy about anything I'm saying.
Okay, no, I know, and the only reason I'm asking you about it because it was in the news relative to the deal. So I felt like I had to get your take on that. So a lot of love on Alphabet. A lot of pain on this one.
Yep.
All right, welcome back. Big day for retail. Target. They posted a sales decline. The stock is down 2%. They cut their profit outlook. They stuck by their sales guidance for the holiday season, but they still expect sales to decline. We talked about this yesterday, or the other day.
Yeah.
What are you doing with the stock now? I shouldn't ask you, that's a dumb question. Has this earnings report swayed you in any way to have more conviction to hold it or to sell it?
Well, I did sell a lot last week. We talked about that.
But you said you might sell the rest of it.
Yeah, I mean, I probably will because I think it's dead money. This new CEO, it's going to take a lot of time. We have to see what their investments are going to be in terms of inventory, labor, CapEx, et cetera. The only thing I could say, Scott, the reason the stock's not down more, well, A, it's already down a lot, but the stock's trading at about 11 times earnings, and it yields 5%, which I think is very safe and secure. And also the fact that the whisper numbers for comps were -4, so they came in at -2.7%. That's not good. There's not really anything good here. But I can just say that this turnaround is going to take a lot longer than expected, and which is why the stock sold off when the new CEO was announced, because he was a lifer at Target. People wanted someone from outside. Richard Dixon of Gap was mentioned as a possible candidate. So it was disappointing because we need change, and we need change fast, and I just don't think you're going to see change fast.
What did you think about the CapEx coming in 25% higher and them saying they're going to remodel stores? Shouldn't they be working on shipping times and getting delivery faster?
I mean, there's a million things they have to work on. I mean, a million. They got to get inventory right. That's number one. They got to get labor right. But actually,
are you comfortable with them saying, okay, we're going to spend $5 billion, that's up 25%?
They have to. They have to, Joe. Do you want to own the stock?
And that's why it's dead money.
That's right. I mean, I think you could. I mean, that's why I sold some last week. I just have a very small position, and I said either way, it was going to be a small position headed into this. I don't need to own it. I would much rather, if like Gap is weak tomorrow, I would much rather buy that. I'm going to buy Deckers back in January. Like, I have way other better names with better brands, with better management.
For context's sake, you've owned this stock for a long time.
I have.
How many? Like, when I say a long time, what are we talking? 5 years at least?
Yeah.
If not longer.
And I made a lot of money.
I'm not suggesting you didn't.
In that period of time, and then I've lost a lot of money.
My only point is that you've had this stock for a long time.
Yeah.
So it says something in and of itself.
Yeah.
That you've come to the point where you're like, yeah, I'll probably just sell the rest.
You know, they're not getting traffic now, though. So in the past 5 years, like, the case was they at least had people going into the stores, but they weren't buying as much discretionary. They were buying more consumables, and they were going to Walmart instead, and all that. So, but they had the traffic. Now they don't have the traffic. So that's the problem. And they started not having the traffic 2 quarters ago. That's when I should have sold.
That's why, Joe, you're asking Steph a question. Well, about the CapEx, and shouldn't they be focused on delivery times? None of that matters. It's all irrelevant. They don't have the traffic. The stock can't go up because their sales continue to go down.
Okay, well, they don't have the traffic in the stores, but they also have to work on the speed of delivery.
Yeah, but I mean,
because
that's not moving the needle.
No,
that's not going to move the needle.
No, you can't say it's not moving the needle.
It's not moving the needle.
E-commerce moves the needle. They need to move the needle in some direction.
Yeah.
Right now, they're basically 0 for 4.
Well, digital is 19% of total revenue.
I'm not saying digital isn't important, but improving shipping times. No. You're talking about improving shipping times.
Yeah. So if you order something from Walmart, you're getting it a heck of a lot quicker than if you order something from Target.
Yeah, but you just need the traffic.
You need more people ordering stuff or buying stuff.
You need people in the stores.
Steph, I got you. I'm with you.
Thank
TJX, I'll give Joe TJX. They beat. They raised their forecast too. The stock is, why is the stock not doing much on that?
It's at an all-time high today. What else? Can you pull that back a little bit more, please? Thank you. Stock's at an all-time high.
All right.
It's a beat and a raise. TJ Maxx very strong. Marshall's very strong. they're benefiting from their ability to pick from inventory that's being sold off from full price, and they're selling it at a discount.
How are their delivery times?
In an environment, in an environment where I know e-commerce doesn't matter. It's 2025.
I didn't say e-commerce didn't matter.
We're taking our horses to the store. We're tying them up. We're going in.
E-commerce didn't matter.
Right. Okay. So
they have the traffic.
They have the traffic. There you go. And they have an all-time high.
All right, great stuff. We do have some breaking news. We go to Steve Leisman for that. Steve, you are on the phone, which means this is urgent. What is it?
Scott, we have some news about the data releases from the Bureau of Labor Statistics. And there's some good news, but I think mostly bad news here. Let me go through it here. There will not be an October jobs report as we know it. The next jobs report, we get obviously one tomorrow for September, but the next jobs report will be the November jobs report that will come out on December 16th instead of December 5th. And then they will fold in what they know of the October employment situation into that November report. Let me point out, I think the significance of this right away, Scott, is that the Federal Reserve will meet 6 days earlier without the jobs data from October and November as they meet. This has implications for both sides of the coin in terms of cutting or not cutting. There are many who say the Fed would be brought to heel on the cutting story by the weak jobs data. Well, they won't have that jobs data other than what they get tomorrow. They've also canceled the JOLTS report for September. That is also canceled. What else can I tell you here? The October JOLTS report will come out December 9th. So the Fed will have that for its meeting. And I don't see anything here, Scott, about the plans to release inflation data at this moment other than September PPI, which was previously announced. So just to underscore or to highlight the highlights here, Scott, is that we're going to get the November jobs report on December 16th, and that will include the establishment side of the payroll survey, which is the one that gives you the payroll growth, but there will be no unemployment report for October. Looks like we'll get a regular November jobs report, but it will come out on December 16th, not December 5th as normally scheduled.
They should, though, being the Fed, I mean, they should have other avenues to get a decent read into what the employment picture looks like, though. Steve, it's not like they're completely flying blind here, correct?
That's correct. There is other data. I will point out, Scott, that data is not really tested in terms of how definitive it is. We have the ADP data over time. It meshes with the BLS report. For everything, which doesn't say much about it because we all know it has its problems with revisions, but it's the one most you can get the most confidence in terms of directing policy. So yeah, we will have jobless claims data, which is helpful on the firing side. If that were to spike up, that would be something that would provide the weakness that those who are advocating for cuts are looking for. The JOLTS data can help a little bit, but really it's the BLS data and the jobs data that allows the Fed to move with a certain amount of confidence.
Yeah, of course. Steve, thank you very much for that. All right, we're back with committee moves, and I said we had a big one from Bryn, and in fact we do. You sold Uber. Wow, why?
Yeah, so I bought Uber beginning of this year, early last year, in high 60s, low 70s. Great company. I think DAR is incredible. I thought it was very undervalued. What I've been watching, though, since really September is Uber has hit $100 about 5 times, keeps getting rejected. And so to me, it's like, okay, $100 is the ceiling. I know it's a great company, but I sold it last week around 94. It looks like it's going straight to the 200-day moving average at 86. So I'm going to take my profits, go home, because when stocks get to that outer Earth orbit and they can't punch through, you got to be ready to sit there for a while. And so I just thought I'd take my profits. If it does go back, happens to go back into the 70s, I'll definitely look to buy it again because it is a great company.
But are you worried about, and I feel like you've voiced the opinions before, you know, the robo-taxi competition with Tesla and others. This stock, after having an amazing move, had an amazing leveling off, and then this decline that we've witnessed, right? There it is. That tells the story. Tell me more.
Yep. I think that realistically, Tesla will do Tesla's things. I don't think Elon's going to share it. So put Tesla aside. They're going to do their own robo-taxi. Uber's going to continue to benefit. They will have partnerships with other companies on this driverless side. And obviously, if they can take the driver out of the car, that increases their margins. But this is long term. And so I think that's a narrative that's not even remotely going to come true anytime soon. But I do think, though, that investors say the stock at 100, it's not going to go the way around. And so I do not think that even touches the robo-taxi, et cetera, even touches earnings for years on out. And I think ultimately be positive because they will benefit because they do have the best ecosystem.
Okay. Let's debate it here. Steph, you own it? Joe, you own it, I know, but Steph, I want to hear from you here.
Well, look, the stock's up 48%, so good for Bryn. She's probably up more than that. I look at the valuation, Scott. It's actually pretty attractive at 16 times forward estimates. You're getting earnings last quarter grew 159%. Revenues up 20%. You had user growth up 17%. Frequency up 4%. It's a verb. I've said it before. You want to own verbs, right? You own the Google. You want to own an Uber. And I think they are the dominant with the best management team. And so, look, I have no problem taking profits. I just think that there's more to go, and I'm willing to be patient.
Joe?
I'm personally long at 36 from 2023. 80 is my level. If it breaks below 80, that is where I would get out. That was previously a significant resistance area. It's now a support area. I'm trying to wait. The stock is basically running in place since May. I thought we were going to break out after the most recent earnings report, and we should have, and we did not. And I just think it's indicative of the overall environment right now, whether it's Palantir or an Uber. You're getting all these earnings reports that look really good, but the price action doesn't follow.
Well, they do have a $10 billion buyback. They're buying 9% of their shares outstanding back, so that's nice support, too.
Let me get you on another move, Joe, real quick. You mentioned the other day that you were trimming Apple, which is why I didn't want to make too big of a deal today that you sold the rest of it personally, but you still have exposure in the Joe T. You explained to all of our viewers already why you had trimmed it just to get out of it personally because you're exposed to it in the ETF. So I don't want to get into that. But the proceeds have gone into the GLD. That's the story I want you to tell us.
Bought the GLD. I'm not liking what I'm seeing overseas. You're seeing the long end of the Japanese bond market begin to back up. You're seeing the dollar, which is beginning to rally. So I'm wondering if we turn the calendar into 2026, does that conversation re-engage itself once again? Precious metals have pulled back. They've corrected. They've pulled back into very supportive moving averages. The GLD, I'd probably stop myself out somewhere around 363. 364-ish, but I thought this was a point of entry that had a low risk, potentially high reward.
You don't feel like this is like a clear sign that whatever momentum was behind gold is now leveling off? Because this has tracked that for obvious reasons.
So it's interesting, and I've talked about this a little bit. When you look at the macro momentum assets, it was first the dollar in September, then it was crypto in early October, and then it was gold, to your point, in October that rolled over. What we're seeing in the last couple of days is while the dollar is continuing to rally, while crypto is accelerating to the downside, there's a degree of resiliency in the precious metals market, and that scores near-term momentum a little bit higher. So I like that resiliency and that relative outperformance versus its macro momentum peers, which is continuing their reversal of trend.
All right. That's good insight.
Thank you. I
So
appreciate
give a
that.
little pat on the back. All right. Take the stick up a little high occasionally and give a little pat on the back.
He's trying, Jimmy.
All right, GE Aerospace, reiterated by Deutsche Bank, says 360 is the target, and Stephanie Link likes that call.
I do, but I don't know if I'd be buying it here, Scott. The valuation is pretty rich, and it's up 79% year to date. But it's really about commercial services, which is 70% of the revenue, and it carries high margins, much better visibility, good free cash flow. So I like the story. Just don't think I'd be buying it here. I wait for a pullback.
All right, Joe, what about DoorDash? Would you be buying it here, upgraded to a buy, the target to 260 from 220 at Jefferies?
Nope, I cannot advise buying it here, and I have advised buying it in the past. It was one of the favored names in consumer discretionary for the better part of 2025. We still own it. The momentum is clearly broken down. The last earnings report was awful. I don't want to be catching what could be a falling knife.
You feel like you took a puck in the teeth?
Oh, for sure.
Okay.
Yeah, I do.
All right. Boeing reiterated buy. UBS, price target 275, Steph.
So this one I would buy. I would add to it. It's pulled back after the quarter, 777X charge. That was overshadowed by a very good quarter in commercial deliveries, backlog, free cash flow. This one I would definitely be buying here.
What about Freeport, Bryn? Sector outperform from perform at Scotiabank. You own it?
Yeah, I think the stock has really settled in after that catastrophic mudslide in the Grasberg Clinic in the mine. And so, I mean, I like this stock here. It's actually going to be my final trade because I think you're going to see copper prices continuing to be strong, and the stock has settled in here around 40.41.
Elanco Animal Health upgraded to a buy from hold. 25 is the target at Argus, Steph.
Then this stock has had a nice run, too. It's up 85% year to date. The turnaround is definitely evident. Stock's still cheap. It's executing way better than Zoetis, but I prefer Zoetis given that it's lagged.
Give me insight real quick, Joe. Target to 120. Jeffries.
Biopharma, oncology, really strong earnings report recently, plays into the healthcare theme. That, along with Insulet, are two names I would own.
All right, good stuff. We'll do finals after this break. All right, Stacey Rascon, Malcolm Etheridge, Dan Greenhouse, Lauren Goodwin, Sherry Paul. That's who's joining us on Closing Bell today, 3 o'clock Eastern Time. It'll be the final stretch into NVIDIA's earnings in overtime. So we got a lot to talk about, and I hope you'll join us then, 3 o'clock. Bryn, I know you'll be watching because you own NVIDIA. What's your final trade?
Definitely Freeport, but you can also sell the February 45 calls, collect $2.15. If it gets called away, it would be a 14.5% total return in 3 months. So not bad.
All right, good stuff. Thank you. To the good farmer.
Cisco Systems, speaking of farming, this thing is a workhorse. I mean, this is a Clydesdale of a stock.
Is it a deer or a Komatsu or whatever you have?
Clydesdale.
All of the above.
You don't want to say? Steph, quick.
Teradyne, I like semi-test equipment companies.
Joe.
Jimmy, you should own McKesson, all-time high, reasonable valuation.
Okay. So that does it for us. We will see you at 3 o'clock Eastern Time. Take you right into that NVIDIA report. The exchange begins. Brian, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with AI anxiety. It is again the story today, following a downgrade of 2 hyperscalers and even more questions now about those so-called circular deals. We will have reports on all of that coming up in just a little bit. We're showing you the scorecard here with 60 to go in regulation. We're well off the worst levels of the day. We do have more sectors green than red, and that has helped turn the market picture around just a bit. Winners include the banks today. The alts managers, they have been weak, but there's JPM, Goldman, and Morgan Stanley. There are the alts managers getting a little bit of a bounce back. Airlines have been green, not Home Depot. Home Depot's been a drag today after its earnings miss. We'll watch that stock down near 5% today. The Bitcoin sell-off very much in focus, reversing a little bit, dipped below 90,000 earlier in the day. Negative for the year, a little bit of a bounce. We'll watch that as well because it reflects the market picture at large, too. It takes us to our talk of the tape, the state of these markets ahead of NVIDIA's earnings in a little over 24 hours from now. Let's welcome our panel. SoFi's Liz Thomas, Brian Belsky, he's the founder, CEO, and CIO at Cumulus Investment Strategies, iCapital's Sonali Basak. Everybody here at Post 9, how we like it. It's good to have everybody. Liz, are we closer to the end now of whatever this pullback is? I mean, it's not really a correction.
No.
We're 6% off the highs for the S&P. What do you think?
I think we're closer to the end. Now, some of the stuff that I think has already found the end, look at things like small cap actually got to some oversold conditions and now have bounced back. They're the major index today that's green. You mentioned this already. 9 out of 11 sectors are green today.
Yeah.
So we've had a pretty good wash of some of that excess, and it's important to wash out this excess throughout a very strong bull market. I've mentioned this before. We're going to have these intermittent breakdowns in beta. And frankly, I think some of these are what's keeping us from getting so overly exuberant and unhinged. So they're healthy to see. They're tough to sit through, but they're healthy to see. And I do think we're getting toward the end. That doesn't mean that I think it's done today, right? But I do think we're closer to the end than the beginning.
Well, it could be. I don't know. I mean, it's, you know, Jim Lebenthal, Brian, made the case on halftime that this is a sentiment-driven pullback. It's not like something terrible happened somewhere and now the market is, you know, having these ripple effects through it. People are concerned about too much spend, too much debt, too high valuations, and the such. I mean, if you look at the Bank of America Fund Manager Survey today, it tells a story. More than 50% of fund managers survey investors continue to think AI stocks are in a bubble. That says it all.
Yeah, I heard you push him today on that. That was really, really a great exchange back and forth. But I think you got to take 2 steps back and look at stocks on an individual basis, but also look at stocks in the S&P 500, but especially technology, where you're seeing free cash flow levels at what they are, where debt to equity is at near all-time lows. So it's on a stock-by-stock basis. And so I do think that this, again, just begs, and people hate when I say this, but it's really begs to be more of a stock picker versus buying a technology ETF or anything like that, because we're very clearly seeing stock differentiation. Look at today. And so that's, and how bottoms are made, you're starting to see that actually occur. What also is very, very healthy, and Liz nailed it on what's happening with the market, is that you're seeing people come in and buying these areas that are providing opportunities, whether or not it's healthcare, the banks, and the fundamental prowess of the airlines are also being rewarded today in terms of their stock strength.
You know, JP Morgan's Vice Chair Dan Pinto warning of a possible correction in valuations. You have the downgrade of Microsoft and Amazon today at Rothschild, where their commentary, I think, speaks to where the concerns are, Sonali. It's a time to take a more cautious stance on the hyperscalers and move beyond the industry's reassuring, trust us.
We think there's going to be bifurcation at this point. You're looking at the narrative starting to change in AI, and we don't believe that the whole story is over just because you have a few days of negative headlines of what came into this year as a mega trend going into the next few years. We do think that you have to still be more selective at this juncture, given just how much debt we've seen come into this space in a short amount of time. You know, you look at every metric actually at this point. You look at even the weighted average maturities of how long these companies are holding debt and have to roll them. So I don't think it's over. I would agree with Liz completely. We used those same words this morning. We felt that it was closer to the end than the beginning when you looked at the sell-off that we're looking at.
You said something really interesting just now. The amount of debt that has come in a short period of time. Yes, these companies have announced debt raises, fair amount in a short period of time. By historical standards, the total amount of debt being raised by these companies, which have unbelievably great balance sheets, is not much.
Right.
It's just we're not used to seeing it. We're not used to hearing about it. We're not used to an Oracle being questioned, having its balance sheet, called out by the market. It just adds to the sentiment concerns. It's not like you're worried that one of these hyperscalers has borrowed too much money and has all of a sudden taken on so much leverage. These companies are sitting on piles of cash.
Right. I think the nervousness came in because it started to seem like it was changing the story. The story had been, well, these companies can internally finance. They just use all the cash that they're sitting on. They don't need to go to the market to get debt. They don't need to raise money to do this. So now it was like, well, how come now suddenly they need to raise capital to do all of this spending? Maybe they don't, right? And I'm painting with a broad brush. I have to. I'm not going to talk about individual stocks, but maybe they don't have to. But sometimes it's the more efficient thing to do. Sometimes it's more cost effective to raise debt rather than extend more equity, whatever the case may be. But you're right, it's not at a concerning level. There were some questions raised about, okay, does it mean that they don't have as strong of a cash position as they thought? Or does it mean that they...
But that's crazy, though, right?
I mean, there's no way that's the case.
I don't know who would be asking that question, but I mean, if you look at what the hyperscalers have in terms of their cash positions, I mean, let's get real.
Right. They don't need to raise the debt. It's not as if suddenly they're short on cash and that's what they're doing it for.
Sometimes it makes perfect sense to do it.
Yes.
Like, why are you going to draw down your cash levels when you can go to the debt market and you can raise some debt and you can help fund this incredible build out that way? The other point I guess I would ask y'all is this idea of a bubble, right? If I tell you that more than 50% of fund managers think that AI stocks are in a bubble, based on what? Like, how can you determine that they're in a bubble? They're spending, gobs of money on a build out, the likes of which we've rarely seen, and we don't really know what the end game is going to be. Can you declare it a bubble today?
No, you can't. And I think it goes back to your conversation earlier about sentiment. I think when you keep on hearing bubble, 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 you start to believe it. That's number one. Number two,
self-fulfilling prophecy.
Self-fulfilling prophecy. There's a difference in life between needing something and wanting something, right? They don't need the cash. They want to take the cash because, oh, by the way, some of these companies are going to do different things with their cash on their balance sheet too. Might be acquisitions, could be buying back stock. So that's why they're going out in the public marketplace. Remember last week we were talking about Oracle was really the poster child for this. Remember Oracle got just ripped higher after earnings. Fundamentally, people missed the stock, so they chased it, and all of a sudden, whoa, why are they going out in the public marketplace getting this cash? And then you really started to question what they were doing with their cash. And then you started to believe the bubble stuff. So again, self-fulfilling prophecy.
Okay, so with AI fears and volatility rising, is it time to look outside the U.S. for better returns? Our next guest thinks so. Elizabeth Burton is Goldman Sachs Asset Management Client Investment Strategist. Welcome back.
Thanks for having me.
All right, so we've spent every day talking about this equity market, and you want us to look elsewhere where the returns have been good.
Yes, we just put out our 2026 outlook. 'Tis the season for next year outlooks, right? And our theme in equities is get out, get down, get caught, and get active. So in terms of down and out, down and cap, out of the U.S., couple places to look there. I know you had my colleague on talking about small caps the other day. We're still constructive on small caps in the U.S. and outside the U.S. We are.
All right, let's start there since you went there, because that's probably going to be the if there's a controversial take, that's going to be it.
Fair enough.
Why?
Well, for one reason, we're thinking about diversifying portfolios. So if you think about small cap growth in particular, we've seen a lot of our clients asking about low volatility strategies, extension strategies. One of the benefits of strategies like small cap growth is you can capture more upside. Obviously, you're going to capture more of the downside, but you're not having to give up the upside like you would in a low vol strategy or potentially on the downside in 130-30, 150-50. So there's that. Also, intra-stock correlations and inter-stock correlations in the small cap sector are at historic lows, or multi-year lows, 5 to 10%. So we think that there's a lot of opportunity for alpha in the space. And it's a part of investor.
We've underperformed. I mean, relative to the other market, we're up, the Russell's up 6%, a little shy of that year to date.
Yeah.
A lot of that depends on the rate picture.
Yes.
Right?
That is part of it. And the growth picture.
And the growth picture.
That is definitely a part of it.
I feel like we're having questions about both.
You could have questions about growth, but it's also a good way to play or an interesting way to play the AI trade. So you can get some of your thematics in there as well. I get that a lot of people had to defend their small cap views and small cap exposure lately, but I sort of like asset classes that you have to defend because it means a lot of folks are avoiding them. You know, another one of those is real estate. So we've been waiting for a time to get back into that market, and that's starting to look appealing, at least on the debt side as well right now. Okay, so it's fair to be a contrarian. Overseas. So I think it's emerging markets and Europe maybe have outperformed the U.S. this year. Right.
Why does that continue into next year? And what's not known about it now?
Well, so I'll take your question a little bit differently. In terms of emerging markets, on the broad, emerging markets have outperformed the U.S., but on a single country level, that's not completely true, right? So one area that we've moved, that our analysts have moved underweight to overweight is within India. So EM up 20-30% year to date, India specifically only up about 3%. And then a lot of the headwinds that caused the underrating last year are now constructive for the overweighting this year.
That's interesting because we've been hearing a lot about India as being a favored place. The reason why it's underperformed this year is what? The trade war? The tensions that existed between the U.S. and India, which are obviously still there? I
think that might have accounted for some of the uncertainty in the pullback. But if you think about this time a year ago, India was at trading at a 25 times multiple. It's retraced back to a 23. Its premium versus other EMs was in the 90s. Now it's closer to a 45. They had a lot of headwinds going on there. But now we've seen government reforms and policy reforms that should be constructive. We see tax cuts. We see policy cuts. Bank deregulation. So it's an interesting place to look for opportunities.
How do you feel about the concentration of the U.S. market? How do you feel about the volatility that we've seen in these AI stocks?
Well, I'm not going to say it's not concentrated, right? I think that
it is.
That it is concentrated.
Does it worry you?
Concentration is worrisome when you think about it at a total portfolio level because it's not just concentration in U.S. equities. It's the thematics in that portfolio that are concentrated in almost every asset class that an investor owns, right? But someone at Goldman I was talking with the other day said if you're going to say no to the U.S., you better get that timing pretty perfect, because there are a lot of reasons where the U.S. is still poised for performance. It may be over the next decade that it does underperform peers, but there's a lot of reasons why they have outperformed, and the fundamentals are there.
Yeah, well, I mean, your colleague, I cite his stuff all the time. Tony Pasquarello is still pretty positive on the U.S. for a variety of reasons.
Right.
Where the flows are going, the Fed is engaged, earnings are still good, growth is still good, CapEx.
Yep.
He paints a pretty compelling picture still.
And we still have some of our clients on the institutional side are still actually underinvested in U.S. equities, so they actually need to re-rate that exposure. There's also I mentioned this, I believe, the last time I was on, the reinvestment culture and CapEx that is inherent in the U.S. market is very different than what you find elsewhere. We see reinvestment in the high 40s, low 50s for the Mag 7, in the 30s in the S&P. In Europe, for example, it's much lower than that. So there's a reason why we still continue to be constructive.
Lastly, are you a believer in the healthcare trade? I mean, after doing nothing, it's had such a great move here. Do you like it?
Look, I think there's a lot of parts of healthcare that we think are really long-term trends. We don't think aging is going to go away anytime soon. So I think it depends how you play it.
All right, we'll leave it there. Elizabeth, thank you. Elizabeth Burton, Goldman Sachs.
Well, many have jumped on the AI infrastructure bandwagon. Not all plays have kept pace. Senior markets commentator Mike Santoli is here to explain. Mike.
Yes, Morgan. So Nvidia obviously has been the leading and most consistent beneficiary of the entire AI build-out. You see that here in blue. But I wanted to include others where periodically they've been included, they've been seized upon as potential leverage plays on this trend, and sometimes they've faltered, right? So there you go. There's Supermicro, gets pulled in and then out. CoreWeave surges, also falls. Broadcom, much more consistent. AMD as well. I think it's healthy. The market's becoming more discerning and trying to figure out exactly how much is going to go to each player. Now, take a look at another representation of this. The stock correlation among the big hyperscaler companies, the spenders in this boom, has crashed. That means the stocks are moving their own way. This is Microsoft, Meta, Alphabet, Oracle, and Amazon. That's what composes this group right here. So they were all moving as one. Everybody was going to win a few months ago. And now you see Meta down hard, Oracle giving back its gains, Google soaring. So again, you're seeing this discernment play out in lots of ways, Morgan.
All right.
Want to mention the results are out. We are going through them. You can see the stock is up a couple percent.
Yeah. So, Gil, I'm going to go back to you, but we're probably going to cut you off here in a couple of seconds, and that is depreciation. How important is that? Certainly investors are debating how long the shelf life of these chips actually is.
It's very important because it's a big driver of profitability for their biggest customers, Microsoft, Amazon, Google. Their current depreciation schedule corresponds to a certain level of margins. If they had to accelerate that depreciation schedule, their margins would go down. But more importantly for those companies is their cash returns. And their cash returns really don't...
I'm going to cut you off so we can get to Christina. Yes. Stay right there. Christina Parts-Neveles has the numbers.
Let's start with the top and bottom line. So it is a beat. $1.30 adjusted EPS, earnings per share higher than the street, 5 cents higher on revenues of $57 billion. Also higher not only than the street, but higher than buy-side numbers in regards to data center revenue, which is contributing about almost 90% of total revenue. So a big factor. That is stronger, $51.2 billion. And then gross margins. We keep worrying about input costs, memory costs, et cetera. Gross margins coming in slightly above 73.6%. Street was anticipating 73.4%. There is a very bold statement from Jensen Huang, the CEO of Nvidia. Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference. So, and he said we've entered this virtuous cycle of AI. So I'll go through it to get you some more numbers, but so far quite bullish. The stock reacting positively. Guys?
All right, Christina, thank you. Stock's up about 4.5% right now. Gil, I just cut you off, so I want to get your initial take on this.
Yeah, I'll finish the thought to say that their most important customers are Microsoft, Amazon, and Google. Those companies have all the customers, and they just told us 2 weeks ago that just in the most recent quarter, they saw a positive inflection point for demand. So they are able to rent out NVIDIA's GPUs years in advance, and they're building to that demand. That tells us they're getting positive cash-on-cash returns, which is the most important thing. Of all the things that are happening to NVIDIA, the most important thing is that those three companies, which represent most of the demand and all of the customers, are telling us they need as many Nvidia GPUs as they can get.
Patrick Moorhead, want to get your reaction to what we've heard so far from this print, especially with Jensen Huang saying Blackwell sales are off the charts and cloud GPUs are sold out. Oh, all right. I think we just lost Patrick. Gil, I'll get your thoughts on that.
So the numbers are great. Again, the numbers right now are great. What's more important is that for the first time, so 2 weeks ago when Jensen told us about that $500 billion number, he was giving us the longest term guidance he's given in a long time. So that tells us everything is hitting as it should. They should be able to live up to that demand. So not only are the numbers right now good, but we do have more visibility into next year than we've had before.
All right, speaking of visibility into next year, let's get the guidance from Christina Partsinevelos. Christina.
So we have Q4 revenue guide. That is coming in at $65 billion, not only higher than the street, but higher than most buy-side numbers. Morgan Stanley, Bank of America was, guessing anywhere between, I shouldn't say guessing, but saying between 63 and 64 billion. So you can see this guide coming in at 65 billion. Same thing for Q4 non-GAAP gross margins. Again, this number is at 75%. Keep in mind, CFO Colette Kress promised that they would exit the year in the mid-70s, around 75%. So it seems like this guide is holding true to that promise so far. So again, shares reacting positively to this stronger guide that is even higher than what the buy-side houses were expecting.
All right, Christina, thank you. I know you're continuing to look at it.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It is Wednesday, November 19th. It's 5:24 p.m. The market has closed. And as you can see, after the earnings announcement, Nvidia here spiking up 8.62%. It's still moving, in fact. We're looking at the after hours. Okay, let's look at the 5-minute. There's the 5-minute chart right there. So you can see at 4 p.m. where we closed, right, and how it's been moving up ever since. Some of the news today about Nvidia. Here's what we're going to do. We're going to cover the S&P 500, the NASDAQ, the ETFs that you see right there, Russell 2000, the VIX. We'll look at a number of stocks that they talked about on the halftime report. So about 22 stocks and ETFs that you see right here, including, like I said, Nvidia and Google, energy, TJX, okay, silver, gold, Bitcoin. We'll look at Tesla, Apple, Meta, Microsoft, and Amazon. And we'll take a look at some of our members' requests down below over here. Okay, so let's first get started. Let's take a look at the markets and let's see how they did today. All right, so as you can see, pretty much throughout the day, there was really no clear direction as we awaited, the earnings announcement from Nvidia. The Dow closed up just 0.10%. The NASDAQ closed up 0.59%. S&P 500 up 0.38%. And the Russell 2000 closed just slightly down 0.02%. Let's take a look at the heat map, and so we can see how the market looked at the close versus what it looks like right now, which is more important going into tomorrow, right? So it was only up 2.85%. Nvidia, Broadcom was up 4.09%. AMD was down 2.93%. You can see pretty much the sectors that did well were mostly semiconductors, okay? And the financials did pretty well. Eli Lilly and Johnson & Johnson did well. Some of the utility stocks like CEG, but the utilities didn't do, the majority of them did not do so great, and neither did energy, except for some of the utilities, like I said. Let's look at the post-market. So like what does this heat map look like now after the close? So there's a little button here. We'll go ahead and, whoops, let me close that for a second. We're going to look at the after hours performance. There you can see the change right there. So yeah, it's starting to look a lot more rosy, although the financials dropped a little bit, as you can see, right? After hours, as the semiconductors are up, the technology stocks are up. So that's kind of interesting to me. All right, let's look at the groups as well. How did they close? Technology was up the most, followed by basic materials, communication services, and industrials. Energy, real estate, utilities were the bottom performers for today. But for the week, healthcare and energy have been the strongest sectors, with consumer cyclical and technology down the most. All right. Tomorrow, of course, is going to look very different. It's going to look very different. Here's the information, right? Basically, basically what they did was they expected about 65 billion in sales in the quarter, in the current quarter, and it said expects about 65 billion sales in the current quarter versus $1.43 in earnings per share on 61.66 billion of revenue expected by analysts. So they definitely beat that. Their earnings per share was $1.30 adjusted versus $1.25. Revenue of 57.01 billion versus 54.92 billion. So yeah, it's looking pretty good. Looking pretty good. All right, so let's get into this is a funny look right there. Let's take a look at the stocks, like I said, and we're going to start off over here with the index ETFs. Let's look at the SPY. This is what it's looking like after hours right now. So again, I have the ability through the power of TC2000, the software that I'm using right now, to look at this after hours, and this is what it looked like at the close. I'm going to show you. We were only up 0.39%. We were still. Let me just throw the daily chart so you can see what the daily chart looks like. You can see we were inside the cloud still, maybe barely getting right above it. Okay, and then post market now, you can see that we are certainly bouncing here, and that's good. A lot of more volume coming in as well, so that's positive. I guess, you know what I'll do is, I mean, we can see the percentages here after hours. The VIX and the FEZ are down. Let's look at what they closed at. That's what it was looking like, all right, at the end of the day. So everything is up now. In fact, you know what I'm going to do is, yeah, let's go with the closing prices because that's the most important thing. But the Qs, here it was bouncing. Dow Jones inside the Ichimoku cloud. That means basically that there was no clear direction here. We had some reversal candles, and now, of course, with the the data that just came out, actually the Dow did not move, has not moved post market. The Russell 2000 is bouncing at the bottom of the cloud, so that's a positive sign for the Russell. That's what it looked like at the close. The VIX, okay, down 4.17. Let's look what it looks like. There's no information after hours. And then the Euro stocks, which is interesting now, the Euro stocks at the close, okay, they were only down 0.18%. You can see that they were kind of stalling. There was a little bit of a tweezer bottom pattern right there with the two wicks hitting the same exact level, right? If you go all the way across, you can see how it was finding support right there. Now, post-market, okay, let me just click that button. Ooh, you can see that it created a shooting star and it closed. Well, it's not closed, but it's under the low of that candle right now after hours. So if I switch it to the 5-minute, you can see a little spike and then it dropped. I don't know. I don't know what to make out of that, but we'll see what it looks like tomorrow, of course. All right, so let's take a quick look now at some of the stocks that they talked about on the halftime report and closing bell, which is why I brought some of these 19 stocks and ETFs, and we're going to look at those, including Nvidia, in a few minutes. But here's Google, okay? We've got a spinning top. Now, this is a weekly chart that you're looking at. Very strong, okay? Very strong uptrend for Google. It's for those of you who are new, I always try to give a quick little synopsis of this indicator. The green line is the 9 period. It takes the midpoint, so the highs, the lows of each of the last 9 periods, divides it by 2, so it's the absolute midpoint of each candle, and then it plots it right under, okay? So that's the 9 period. They call that the Tenkan-sen. The red line is the midpoint of the last 26 periods. All right, that's called the Kijun-sen right there. We've got let's see here, we've got the Chikou span. That's today's closing price right there, projected 26 periods into the past. And what we were looking for is for that white line to be above the candle 26 periods ago, which it is, which is a good sign. That's very bullish, okay? And then finally, the last segment of, or I suppose, element of this indicator, let me make this chart a little bigger so we can see that better, yeah, is the actual cloud itself, which is comprised of 2 lines, all right? So what you have essentially is a Senko span A, and that's derived by taking the midpoint of these 2 moving averages that we just talked about, right in the center, and then imagine projecting that 26 periods into the future. That's where you'll find Senko span A, very unique. And then you've got the Senko span B, which actually takes the midpoint of each of the last 52 candles here, and instead of projecting it under like it did in this case here, in this case, it actually projects that midpoint of the last 52 periods, 26 periods into the future. And that's how the cloud is actually plotted and created. So we're getting a pretty good assessment based on averages, and it can help guide us, really. And we want the single span A to be above the single. We want that light colored blue line to be above the purple one, single span B. We want the green line above the red line. We want price above both of these moving averages and the cloud. And we want the white line above the candle. That's it. That's basically all the rules of Ichimoku. So Google looks great on the weekly, and it looks great on the daily. As you can see here, it is above the moving averages. It closed above it. Now, let's take a look and see around. That's the high right there of 292.01. Okay, and it got above that. So it did get above it at 292.81. And then, of course, after hours now, Google, of course, is going to be impacted because of the Nvidia announcement. And let's look and see what that looks like. You can see that it popped, so it's up 4.52. So it's a much more clear picture. Okay, so Google is looking great for tomorrow. Very, definitely very bullish. How about silver? Here's silver at the close, up 0.76%, above the moving averages, above the cloud. Everything is in order except for the Chiku span. That's I guess the only thing that's lacking. The white line is kind of inside the candle. It's not above it. But that's just one little small piece, and it's going to take a little bit. It's probably going to take 3 or 4 days before this white line can get above these candles. So expect that. But overall, I like it. It's looking very bullish. The volume is increasing here. Let me see after hours what that looks like. That didn't really move much. Yeah, I didn't expect it to. And then here's the weekly chart. So still very bullish situation. The thing is, though, with silver, and as bullish as everything looks right here, we've stalled a little bit, right, with the metals. You can see that decline right there, and it's almost like I guess you could call it a pennant pattern, okay? And so if price gets under and starts dropping under the Tenkan-sen, that could be a problem, because then you'll have a lower high here, and then if it gets under this low, you'll have a lower low, and that's a problem right there. But I mean, I'm like more thinking it's going to continue to move up, because the overall trend has been strengthening, since it reached these lows here. Okay, on the daily chart, we established a higher high and a higher low, right? Once we broke this high right here, there we have that. We had a higher low right there from this low, and now we have another higher low from the prior one. So all we need to do is keep on moving, basically. All right, we've got XLV Healthcare, which is developing a base. They call that a base right there. Okay, it's consolidating for a little bit. That's all. It's taking a breather. I mean, healthcare's been doing really well compared to the rest of the sectors. Here's the weekly chart. Okay, you can see it took off. I think there's more to see here. I think it's going to continue moving up. The directional movement index is looking bullish still. ADX is still moving up. So I like XLV as an ETF. What about the rest of these? Well, there's something off technically and so they didn't qualify at 100% for the blue flag, but let's look at them. And as you can see, again, Ichimoku stands for at a glance. We can see that it's obviously in a decline. It's under the cloud. Okay, this is what you don't want. You don't want the single span A under the single span B. You don't want price under the cloud or under the 200. That's the 200-day moving average that you're looking at right there that's still declining. So Adobe is something I would stay clear of. I talked about this before. I mean, today it broke through another low right there. Okay, that happened today. So once a stock gets into this kind of like situation, it's very difficult to pick the bottom. What you want to look for is start to see signs of strength, not just on the daily but also on the weekly. Here's the weekly chart. Okay, multiple weeks. Each one of these candles represents 1 week. You can see how long and extended this decline has been. Boeing is still in a decline. Okay, under the 200-day right there. I'd stay out of Boeing. ELAN, Elanco Animal Health Incorporated. I like this particular stock. In fact, I did have a position in this one. I'll show you guys the notes here. This is a trade that I had placed, and I shared this with members, of course. October 17th is when I got in. I closed out on November 5th for a 10.2% profit. Right now, it's not the best time to get in because it's still under the Tenkan-sen. Let me see what it looks like post-market, though. I moved up a little bit, but it's still held under the Tenkan-sen. So if this thing can pop again above, it's going to give us another new buy signal. But right now, I'd stay out of it for now. FCX, Freeport McMoran, this one has been struggling here. You can see the cloud has been, see how whenever, folks, you see something like this where the cloud just goes bullish and then bearish and bullish and bearish, that tells us there's no clear direction here. There's basically neither the bears or bulls are in charge. In fact, you can also see that by the 200 days. Do you see that dotted yellow line there? It's just going flat the whole time. Look at this. So stay out of that one for now. GE Aerospace. Okay, so this one has pulled back. It's now found some support at the cloud. But the moving averages are not, bullish anymore. I would hold off on GE. On the weekly chart, it is under the Tenkan-sen. All right, let me just see what it looks like post-market. It didn't really move much, so I didn't think so. Okay, so stay out of that one. Gold. How about gold? How's gold doing? Weekly chart looks like it's still holding up above that Tenkan-sen, the 9 period, which is very important. It looks kind of similar to silver, where it's kind of building that pennant pattern. Okay, and so we're kind of getting squeezed in, and that's what we're looking for is a breakout. It's going to happen in one way or one direction or the other. I don't know which way it's going to go. We're going to find out soon enough, though. That's the weekly chart. Here's the daily chart. Gold looks a little bit, not as bullish as silver because the moving average Tenkan-sen has been under the Kijun-sen for a lot longer. But still above the cloud. We'll see what happens with gold. HD, Home Depot, on the daily chart. It's in a free fall. Stay out of that one, okay? Who's to say when exactly it's going to drop? It's going to find maybe some support at 326. That's another 2.4% away from where we currently are, potentially. IBIT, which is Bitcoin. This is the daily chart. Let me show you the weekly. The weekly has entered the cloud this week. That's not a good sign. So it's still pulling back. The directional movement index is still negative. It's negative when you see that red line moving up, the green line moving down, and the white line, which represents the ADX, which is basically momentum increasing. So that's a negative direction, right? And momentum is increasing. You can see all the volume day after day as price has been dropping through the different support levels. And then, it still has that. The next level of support is going to be the cloud itself, which is about 9.5% away. This one moves a lot because it's a high beta instrument, obviously. Okay, let's keep going. INCY is pulling back here on the weekly chart. You can see that. That's Insight Corporation. It's in the biotech industry. Here's the daily chart. So you can see 4 days in a row where it's dropping. Okay. INDA, India. It's above the cloud. So the lady from was it Goldman Sachs, the blonde lady at the end? She was talking about start considering looking into investing in other countries. And I think I'm very due for another country ETF. Analysis. I got to do that soon. But right now, India, Tenkan-sen crossed under the Kijun-sen. I would not be jumping in quite yet. Okay, not quite yet, but it's almost there. There's the daily. There's the weekly. You can see the triple bottom pattern on the weekly chart, and that started to move up a little bit. The cloud itself has started to turn bullish. The future cloud with single span A above single span B. So I like that. All right. Now I'm going to take some notes off here. Hold on one second. Let's look at Nvidia. Here's the weekly chart. So this is the close now. All right. Now it closed up just 2.85% at 4 p.m. But we're going to look at the after hours in a second. So this is what it was looking like, obviously with not knowing exactly where the price is going to go. Here's a daily chart. You can see how it's been pulling back, right? And let me just go ahead and just draw a trend line so you can see that decline there. Okay. And now let's incorporate the after hours with the magic of TC2000. Boom. And it went right through that trend line. It did stall at the Kijun-sen. So it is still up a little over 7% right now as we speak. So let me look at the 5-minute chart on this one. Here's the 5-minute for Nvidia. Okay. So you can see how it's pulling back a little bit right now. All right. Interesting. So, and here's the weekly chart again. Now, on the weekly chart, you can see it also got back above that 9 period. So that's a good sign right there too. I think we're going to see a continuation tomorrow. Here's Teradyne. How about Teradyne? What does that look like? This is after hours. It's up 5.66%. It's in the semiconductor space. What was it at the close? It was at up just 2.75. So all the semiconductor stocks are going to benefit from this jump in Nvidia. Target, stay out of that one. Look at this decline. It ain't stopping it. It's in a free fall, folks. Free fall. TJX looks much more bullish. Obviously, here's the weekly chart. It's holding up above the moving averages, up just 0.16% today. Here's the daily chart. Okay, let me look at the post market. Yeah, it just moved up slightly after hours. So it still needs to get above that. The Tenkan-sen, which is around 147.17, it needs to get above that level. Right now it's at 145.81. Energy, XLE ETF. We got a bullish hammer here. I wonder what it looks like post-market. Ooh, okay, so energy dropped a little bit after hours. Let's look at the 5-minute energy, XLE. Okay. And, you know, when you're looking at after hours, okay, you got to take it all with a grain of salt, because do you see how the candles are almost like non-existent in little dashes? That's because there's really not that much volume after hours. Okay, you can see that right there. It's almost, you know, there's not a whole lot of trading obviously taking place after 4 p.m. when the market closes. But it can give us a little bit of insight of what to expect the next day. You know what I mean? So with energy, we might see it pull back a little bit tomorrow morning. XLK, this is post-market, the technology ETF. It's above the cloud again. It was inside the cloud before. It's above it now. It's still stalling right there. That's, again, the daily chart that we're looking at. Let's look at the weekly. Here's the weekly. So technology needs a little bit of work here. It needs to get back above. Okay, it's like still stalling. This is what it looked like today at the close, though. It was down slightly more. And there's the daily chart. It was inside the cloud at that point. All right, so those are those stocks. Let's take a look at the next level, the next group here. We're going to look at Tesla very quickly. So, you know what I'm going to do is just, here are the percentages, okay? Here are the percentages at the close. All right, there's Tesla inside the cloud. I'll just do a quick analysis on the daily at the close, and then also post-market. So here's Tesla. Here's Apple under the Tenkan-sen. All right. Meta, still in a decline there. Microsoft, also still in a decline. Something I'd stay out of. Amazon, still under the cloud. What does it all look like now post-market? Let's go ahead and click the button. Boom. So Amazon is moving up. It's got a nice bullish hammer, up 1.42%. Microsoft has a more bullish candle right there. Meta too. But again, I wouldn't be touching these stocks right now. Apple is still under the Tenkan-sen after hours, and Tesla still inside the cloud, so nothing major happening. Okay, let's switch it back now to close regular hours, and we're going to look at, I'm not going to get into all the sectors like I normally do, but I am going to, I'll show you what XBI looks like. Biotech, okay, there's the regular hours, and here's post-market. Didn't really move much. Okay. We already covered these other ones here. Let's take a look at BMNR. This is one of our members' requests. Now this one has been stalling here on the daily chart. We're looking and we're seeing the 200-day that's rising, and it literally stalled right there and closed at that level. It was down another 9.6%. How did this react? This is in the financial services sector. How did this react after hours? It moved up slightly, so now it's only down 6.97%. It could get a bounce tomorrow. It could get a bounce tomorrow. This is the weekly chart, still pulling back. So the daily chart doesn't look that great. Weekly chart is obviously in a decline. 30-minute. Okay, there's the 30-minute for you, plus the post-market. This is what the 10-minute looks like. So in the 10-minute, it looks like it's entering the Ichimoku cloud right now. This grayed out area is the post-market, okay? So after 4 p.m. What about let's do Lyft next. Lyft coming down to the cloud. Now, what's interesting with Lyft is the moving averages are still in the correct order. Tenkan-sen is above Kijun-sen. The cloud is all bullish, but the price has dropped, and now we're getting a couple of reversal candles down below. This is where we were at the close. Okay, we were down slightly more. Now it's looking like it's bouncing a little bit. That's the daily chart, and here's the weekly chart. So there's a weekly. Let me look at it post-market again. Just moved up slightly, okay? So, yeah, Friday's going to be the, that's when I suppose you would have to make a decision about what you want to do with this one, because now we have that shooting star on the weekly chart. It's under the Tenkan-sen. Really up to each trader to decide whether they want to be holding into this, because it could potentially pull back even further down to the Kijun-sen there. This Lyft, to reach that next level on a weekly chart, it's about 9.3%, just so you know. Okay, Uber also dropping for 3 weeks in a row now. You can see the 3 candles there. The positive, I suppose, is that the volume has been declining as price has been dropping, and the candles are becoming smaller. So this was the largest candle, then we have a smaller one, and about the same size right there. The ADX here is still dropping, so that the momentum is not increasing. It's just taking a breather, I think. Here's the daily chart. Now, on the daily chart, it looks a little bit more bearish. Did we take out that? Yeah, I guess so. On the daily chart, we did close under it, under that low there. What's it look like post-market, though? Moved up slightly. So that's a good sign. You could see potential tomorrow morning. But with Uber, with the direction movement index, it looks pretty bearish. Okay. Now you still have this support, the 200-day moving average on the daily. That's about 2.81% away. So something to consider. With Lyft, your support on the daily is the cloud itself. All right, that's 2.75%. And then the BMNR, you've got this one here, which is about 5.28% away from where you are. Okay, and then finally, Anit weekly chart. Stalling right there at the cloud. I'm sorry, at the Kijun-sen daily chart. Okay, it's under the cloud. It's still dropping. We've got a bullish engulfing pattern right here. It was up 3.08% post-market. What did it look like at the close? It was down. I'm sorry, it was up just 1.1. Right now, it's starting to show some strength after the market, closed. So here's a 5-minute. All right, starting to move up. And that's going to do it for this video, guys. Hope you liked the analysis that I just did. I used Ichimoku, the Ichimoku indicator. I used the TC2000 software. You can actually get a $25 coupon for this software. There's going to be a link down below in the description area. There's also a link if you go to my page here, Blue Cloud Trading, for the software. If you click 9 more links, which is next to the join button, click on 9 more links. All right, then you want to read this, scroll down, and there's the link. $25 coupon for TC2000 software. You click on this link. You can check out the other ones too, of course, but this is for the software. If you click on it, it will bring this page up, and basically enter your email here, and then you can download the software. It says here, yes, I would like to receive the email relating to TC2000 products. You will receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. The key thing is, as long as you haven't used the service, to be eligible, you should not have used this particular service in the last 12 months to get that $25 coupon. And here's the pricing information, software plans, and data. Okay, you can see it right there. If you do monthly, it's a little more expensive than if you pay for it annually versus every 2 years. And if you do the monthly, for example, you can try out the basic for free. It's $25 a month. Try that out. Why not try out the free version first? But I personally like I would recommend that you do the premium if you want to be able to draw on the charts and use the real-time scanning. There's a lot more options and features here. You can track your stocks with alerts and everything else. You cannot do that under the basic. But you can at least, check it out. And then finally, one more thing I wanted to just say is you can find the Become a Member link at the top here. You'll also find that if you just click on Let me see here. You're going to have to go to another page. Sorry. Actually, no, you don't have to go to another page. You can just click on this link right here. That will bring you to joining as well. So that joining link right there, click on that. This will pop up. There are 3 different tiers to choose from. Blue Cloud Supporter. Okay, and you can request a stock to be analyzed on the show like I just did a few minutes ago. Blue Cloud Trader is the second level. Under this one, you can request up to 2 stocks for ETFs each month. And then you can also access the exclusive member-only videos where I go over my entire portfolio every weekend. And, you know, they're usually about a 1 hour or more video in length. And then Blue Cloud Legend level membership. It's a little bit more expensive, but what you do get is the exclusive member-only videos. 3 stocks or ETFs you can request each month. There are some day trading videos that I've recorded that you can view, as well as the daily trade updates on the trades that I place. And I basically, every day, there will be, next to the post, there'll be once you become a member, it'll say membership. And you click on that, and that's where you'll be able to see if I click on posts too, I should be able to find that last one that I did. I don't want to share that one. All right, but you get the point. That's where you'll find them. Okay, guys. Thanks for watching. Appreciate you all. Have a great rest of the evening or morning, depending on what country you are currently in. And thanks for just supporting this channel. Appreciate you. We're at 25,400 subscribers. Help me reach. Our next goal, of course, is 30,000, which would be insane. We can do this. All right. I'll catch you all in the next one.